people that are not using it that way, they still strengthen the network for people in other countries. If Bitcoin is 5x bigger or 10x bigger, it's another phase that Bitcoin was destined to go through should it ever reach this level, which is what it reached now. And to be clear, I don't think that Bitcoin needs a spot ETF. And I think that if a spot ETF never comes, I still think there's going to be a Bitcoin bull cycle.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses about Bitcoin, according to Lyn Alden, is beneficial for the network if you visit and if you travel to anywhere in Argentina and you say, why aren't you? This is where Lyn Alden tie the knot with the rest of the world. They say things like, well, Bitcoin is quite volatile. Even though Lyn Alden adore Bitcoin, Lyn have to hold primarily stable coins because Lyn Alden have to know what she have to Bitcoin, which Lyn can store for 5 years, but my value will be worth in 2 months, something less volatile in the short run. But Bitcoin can only reach that level of stability if it grows in size. Common liquid additionally. Once you reach higher levels of commercialization, it's virtually inevitable. Larger capital pools may someday choose to participate. Perhaps a central bank will include it on its balance sheet. Certain entities begin pursuing black rock apes immediately upon their discovery, and they not only gain relevance for their own nations, such as, say, it is advantageous for individuals to hold a non-zero Bitcoin position in their various 401ks for their own measure of security, should several of the scenarios we discussed, such as a housing bubble and a stock market that is very inflationary, come to pass market as well as a bond market, and you know if they have any Bitcoin in their 401k, that isn't zero, and lots of things Lyn Alden discuss, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
Well, so what I was going to get to is that, ironically, the reason it's so interlinked, right? So as an asset monetizes, it achieves certain liquidity. Like, for example, when it traded a few $1,000s a day, someone couldn't just ape into it with $1 million. When it trades a few $1 million a day, someone couldn't ape into it with $1 billion. When it trades a few $1 billion a day, there's even bigger pools of capital that still they can move the price if they get too bullish or bearish in a day. The larger and more widespread and more kind of ubiquitous it is, the more types of pools of capital that own non-zero amounts of it, the bigger and more liquid it gets, the harder it becomes for any one entity to move it. I think that's healthy for the network. If you go to, and this is where it ties in the rest of the world, if you go to someone in Argentina and you say, why aren't you all in Bitcoin? They're like, well, it's super volatile. I like Bitcoin, but I have to hold mostly stable coins because I have to know what my value is going to be worth in 2 months, right? Bitcoin I can hold for 5 years, but I have to have something more stable in the shorter term. But Bitcoin only achieves that lower volatility if it becomes more big, ubiquitous, liquid. And there's also it's inevitability. Basically, if you hit higher levels of monetization, eventually larger pools of capital want to join. Maybe a central bank somewhere adds it to their balance sheet. Maybe BlackRock apes into it, right? There's certain entities that start going after it. And not only do they become relevant for their own countries, so for example, it is good for people in their various 401ks if they can have a non-zero Bitcoin position in there, for their own kind of protection. If some of the things we talked about play out, like a stagflationary stock market and a housing market and a bond market, if they have a non-zero amount of Bitcoin in their 401k, it's one, and if that capital is kind of stuck there anyway, and if they're, age 60 and maybe they don't want to get a cold card, and there are 60-year-olds that love cold cards, but maybe not everyone, that's an access point for them. But then in addition, even if Americans then are not using Bitcoin in the way that we would maybe prefer they would use it, like I recommend self-custody, I recommend Swan or any of the other kind of Bitcoin-focused on-ramps. But for people that are not using it that way, they still strengthen the network for people in other countries. If Bitcoin is 5x bigger or 10x bigger, and it's somewhat less volatile, it's still going to be volatile for a while until it's ubiquitous. But if it's less volatile and it's more known and it's had another cycle of growth, that can bring it to more awareness for people in all these other countries that can use it in hopefully the more cypherpunk way. And that's how I view it.
Lyn Alden don't see the ideal way to hold Bitcoin is through an ETF, but strangely, Lyn Alden say, in my opinion, increases market stability. It's simply another level of stability. It's not like a special level of steadiness if the Central Bank of Japan chooses to own 5% of Bitcoin. That's another, entirely new example. There are all these vast pools of money that, for a while, have not been large enough for Bitcoin or have doubts about its viability, and it attains a specific critical mass, even though you are aware of central banks. The BlackRock and sovereign wealth funds are only suddenly huge money pools are interested in holding it as a reserve or a product. And perhaps that's not a good idea nonetheless. That's only a small portion of how an asset is being monetized. And as you may know, Lyn Alden take aggressive measures to invest. For example, in self-custodial or privacy technologies. More about these other nations, or other marketplaces, or methods that Lyn Alden believe are better to hold Bitcoin. Let's back to the Lyn Alden interview.
And I think the way I would describe it is that there's just kind of some degree of inevitability to it, but I view it both, it's adversarial at the same time as it's advantageous, because on one hand, like America as a government does kind of want a walled garden this thing. And so, for example, I don't view the Bitcoin ETF as the best way to hold it, but I do think that ironically that adds stability to the market. It's not like a unique level of stability. It's just another level of stability. If Japan's central bank decides to have a 5% Bitcoin position, that's another, it's a completely different example. There are all these big pools of capital that for a while Bitcoin's been too small for them or unclear if it's going to work out, and it reaches a certain critical mass. Though, sovereign wealth funds, central banks, and the BlackRock, just large pools of capital suddenly get interested in having it as a reserve or as a product. And maybe it's not great, but that's just it's part of a monetization of an asset. But I proactively then go out and invest in, say, privacy technologies or self-custodial technologies, focusing more on these other countries or other markets, or ways that I think is preferable to hold Bitcoin. And I think that it has been stress tested. Like, for example, during the Canadian trucker protest, when they tried to then blacklist Bitcoin address to go after them, that was kind of a stress test to say, okay, what could we have done better next time? Mt. Gox was a stress test. It helped us bring, like hardware wallets and things like that. Every time there's like, when China banned Bitcoin mining, they had multiple failed bans, and one of them finally kind of stuck, and that actually helped decentralize mining a little bit more than it already was. And some mining reemerged in China anyway. So Bitcoin does go through these challenges over time. So far, it's been successful at being anti-fragile when it faces them. And I think this is yet another one. This one comes with both pros and cons. It's good for price and liquidity, which can be good for eventually for volatility. But it also comes with, a lot of people just kind of get trapped in walled gardens. And I think that this is it's another phase that Bitcoin was destined to go through should it ever reach this level, which is what it reached now. And to be clear, I don't think that Bitcoin needs a spot ETF. And I think that if a spot ETF never comes, I still think there's going to be a Bitcoin bull cycle. I think it's going to be heavily tied to global liquidity, and it's tied to like the hodler wave. So basically during bear markets, the strong hands keep accumulating coins, and then you get a halving, and then just, the supply side gets very tight. So it only takes this tiny spark of new demand to really kind of lift the price next. So I think that regardless of whether a spot Bitcoin ETF comes, I think we're going to eventually have another cycle. The spot ETF can just potentially accelerate or magnify that cycle. And that has some pros and cons, but I think it's mostly pros in the sense that, one, it's inevitable, and two, any higher level of liquidity and size is good for the overall network, especially for people that are ironically not in those walled gardens, that are still benefiting from the stability and liquidity and market size and price action that those walled gardens are giving the whole network.
According to Lyn Alden, is another one of these one has benefits and drawbacks. It benefits pricing and liquidity, which in turn may benefit volatility in the long run. Nevertheless, it also comes with the fact that a lot of people, Lyn Alden say, in my opinion, just end up becoming stuck in wall gardens. If Bitcoin ever does get to this point, as it surely will, it's just another stage that it was meant to go through, reached at this time, and just to be clear, Lyn Alden don't believe that Bitcoin requires a spot ETF in the event that one never exists. Continue to believe that a Bitcoin bull cycle will occur. Lyn Alden believe it is closely related to global liquidity, and due to its connection to the hodler wave, wealthy individuals continue to amass coins throughout barren markets. It only takes a small spark of fresh demand to cause the supply side to become extremely tight when you having actually kind of raise the price after that. So Lyn Alden believed that whether a spot Bitcoin ETF appears, we're going to eventually begin a new cycle. The spot ETF may be able to quicken or intensify that cycle. If you learn something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.